All right, y'all, I am super excited to be going over this session because this is honestly where the money's at. Of course, paper money, right? Because this is not financial advice meant for paper trading only. But what I want to do today is I want to talk about one of the highest win rate trading strategies that exists. And I also want to talk about different filters that we can use to determine whether or not we can take a trade. And so I've kind of broken this down into sections. The first one is we're going to be talking about the 12-minute strategy using money flow and momentum. We're going to talk about how to determine whether or not there's a trade there. And then we're going to talk about how to tell if divergences are legitimate. Because one of the major problems that people have is they see divergences forming on higher time frames, and so they enter a trade, but then they get stopped out anyway. And so we're going to be talking about how to look at those lower time frames to determine for real if price is going to reverse when you are looking to either short after a pump or long after a dump. And then we're going to talk about how to be very confident when entering these trades. Now, the gist of this strategy is very, very simple. If you see on the 12-minute time frame a divergence with momentum and money flow, you enter the trade. Now, let me kind of go over, first of all, we need to talk about what a divergence is. Okay, now I know some people already know this, and I know we've gone over this in other sessions, but this is very, very important for anybody who might not understand fully what a divergence is. Now, this is a regular divergence. A bearish divergence is if price is in an uptrend, making higher highs and higher lows, okay? But then our oscillator over here on market cipher B is making a lower low like this, okay? And what we want to be able to do for the divergence is we want to be able to connect that first high to that second high, and then connect this high to that second high on the oscillator and see that there is an imbalance here. What is the oscillator telling us? The oscillator is showing us where the money and the momentum is coming in on the market, right? You could just think about this logically. If price continues to get higher, and yet we can see from our oscillator that money is leaving the market, and the power of the bulls is lessening to the point where now we actually start to, after this massive pump, have much less power coming in from the bulls. What is that telling us? It's telling us that Bitcoin is overbought. It's trading at a price that's too high, and nobody wants to buy it at that price anymore. That's why we don't have the momentum coming higher. The buyers are running out of steam, and there's going to be a correction. And what we mean by a correction is basically, when we're looking at price, we're always looking to see price trying to find equilibrium within a fair value. Okay, so if we're looking at volume here, we know that the fair value of the asset is always going to be within this value area, right? And so if the price comes outside of that value area, we know we can expect, or at least we can be looking for a movement back down into the value area. And if price comes below the value area, we can be looking for a movement back up into it. Now, if price comes outside the value area in conjunction with a divergence, that is almost a 90%, I would say it's at least a 95% certainty that this movement to the upside or to the downside cannot continue, because it is not backed up by the willingness of the market to continue to buy or sell the asset to keep pushing the price in that direction. Okay, so if we see this bearish divergence, we can expect that price is going to come back into, or I should say we can expect that price is going to reverse and come back down lower. Now, the opposite is true if we are in a downtrend and we're making lower lows and lower highs, but then our oscillator over here, market cipher B, is maybe making a higher high. This is a bullish divergence. The reason why this is a bullish divergence is because price keeps getting lower, but now we can tell that the sellers are running out of steam and the buyers are starting to step in, and there's an imbalance between the price and the market participation. The participators in the market are trying to push the price upward, yet the price continues to come down. That's telling us this is a major discount, and we can expect the price to move back up. Now, market cipher B, as we're already aware, has more than just momentum waves, right? This is not just an RSI or a MACD. there's also something called the money flow. And the money flow is what really gives us the edge when it comes to trading with Market Cipher, because this is showing us the money coming into and leaving the market. Okay, and so what we want to do in order to find reversals in price is we want to see a divergence with the money flow and the momentum waves. So what I have done here is I have split Market Cipher into two, and on one Market Cipher I only have the momentum waves, and on the other one I only have the money flow. And I'll turn on the dots for the sake of simplicity. Okay, but let's see something here. Okay, I'll turn on the dots for the sake of simplicity. But here's what we're going to do, and this is how the basic strategy works. On the 12-minute time frame, whenever we see a divergence with momentum and money flow, we will enter a trade. So we're going to find a few here, okay? And basically, this whole sideways range right here has been very, very, very lucrative for myself and many others. And really, you don't have to be an expert at technical analysis in order to find these trade setups. For example, we come over here, and we can see that as the price is putting in a lower low right to the exact bottom, right? Look at this, right to the bottom. We can see that our oscillator on Market Cipher B is from this point right here to this point right here, making a higher momentum wave, right? A bullish divergence. We can see the price is coming down, yet the oscillator is printing higher lows. Price is making lower lows, oscillator making higher lows. This is a bullish divergence. And notice something else. Notice something else. I want to just analyze this entire move down, right? We have a lower low right here. But what we don't have on the oscillator is a higher low, right? In fact, we have a lower low as well. So we'd say, okay, no trade here. But then we come down for a second lower low, and we see that our oscillator has a higher low right here, right? We can kind of see from that point to this point, higher low, that would have been a trade. And boom, look at that, beautiful long. And then we come down for our third low, and again, we have a trade. Look at this. Very, very nice long. Now, the filter for getting into the trades is going to be the money flow. If the money flow is, in fact, getting higher, then we enter the trade with confidence, okay? For example, we can see that from this point here to this point here, the money flow is getting higher, and then we can also see that from that point there to that point there, the money flow is also getting higher. And so these two trades, this one right here, and this one right here, both very nice longs. We have confluence between the momentum waves and the money flow. Confluence between the momentum waves and the money flow. Now, a few things we need to take note of. First, if the momentum waves come below the negative 60 line on Market Cipher B, this is the thick white line down here, that is always going to be a much more powerful move than if we have a divergence that, let's say, is above that negative 60 line. And the same is true for shorting. If we're above the 60 line, it's going to be a much more powerful move than if we're below the 60 line. Why is that? Well, it's going back to our idea of overbought and oversold, right? We know that price is always trying to find equilibrium. It's always trying to find equilibrium. And if we have the oscillator come down below the negative 60 line, this means that it is oversold, meaning we're pretty much getting at a discount. And if it comes above this line, that means it is overbought, okay? Price is too expensive. And in both of these cases, there needs to be a correction. Why is it called a correction? Right? People use that term all the time. Oh, it's just a healthy correction, right? You hear it all the time. Bitcoin's lost 50% of its value, and long-term hodlers and Bitcoin maximalists are like, oh, it's just a healthy correction. Where did that term correction even come from? The reason they call it a correction is because there's an imbalance in the market where the price is not in conjunction with what the market participators are doing. If we can clearly see that the market participants are adding money to the asset and momentum is coming up, meaning there's more power every time we get a move to the upside, right? Momentum is getting higher. This is telling us that there's an imbalance. The market participants are trying to push price up, and yet price is coming down lower. There has to be a correction here. This is unsustainable. And the same is true when we're looking to short, okay? Now look at this. We just went over a long. Let's talk about a short entry right now. Same exact thing. We're going to be looking at the momentum waves and the money flow, okay? So we come up here and we are looking at the fact that as the price is making higher highs, right? We can also see money flow making lower highs, okay? Now, I said there are a few things I want to talk about. First of all, the depth of these momentum waves. Second thing I want to talk about is the money flow, okay? There's two ways to identify money flow divergences. First of all, you can look within the actual money flow wave. What do I mean by that? When we're looking at money flow, we can see that it's oscillating above and below the 0 line, right? We can see we have a blue wave coming up and then it comes down purple. And then we have another blue wave coming up and then it comes down purple. You can look at one single money flow wave, and if you see this thing coming down while you also see a divergence, that is a valid money flow divergence. Okay, another way to be looking at money flow divergences is across multiple waves. Here's an example of that across multiple waves. Right here, we're coming up to making a higher high, and the money flow right here, we can see, is from this wave to this wave getting lower. Okay, so these are two different types of money flow divergences that we need to be aware of. One is locally within the single wave. The second type is from wave to wave. Now, something else I need to point out is when it comes to the momentum wave divergences, we always want to make sure that we see from the first high or low of the price, we want to basically connect the tips of these momentum waves with the highs that we see on price, okay? In other words, we have a high. Let me zoom in right here. You have a high. What the heck? I want to zoom in here. We have a high right here. We're lining up this high with the red dot on the momentum wave. We have this second high right here. We're going to be lining this up with the red dot on the momentum wave. It can be like a few candles off, but we still want to basically see these momentum waves topping out at the same time as the price is putting in a high. Different for the money flow, okay? Different for the money flow. For the money flow, we just want to make sure that the direction is there. We don't have to line it up with the exact highs, okay? Because we can see from this high to this high, right? We're connecting these two highs with the trend line, but on the money flow, we're not connecting it back to this, right? We're not connecting it back to this. We're just connecting it from here and noticing that over time, the money flow is also coming down. So the money flow does not have to line up perfectly with the highs of the price. It just has to confirm the direction, okay? So we went over the long and we went over the short, all right? And essentially, this is how we're going to be doing our trades, okay? We're going to go through this process. First, we need to see, actually, one, is price trending? Okay, aka higher highs, higher lows, or lower lows, lower highs. All right. Is it? That's what we want to see, right? And of course, price is always going to be doing something like this, right? So then we ask ourselves to look at the momentum waves. Is there a divergence? Yes or no? This is the strategy, okay? Number one, is price trending? Yeah, it's always trending. Okay, so we're going to look at price. We're going to look at price, and we're going to take note of the market structure. What's the market structure looking like right now? Right now, for the past few hours, we can see that we're in a downtrend, right? We're in a downtrend. Okay, we can clearly see that we are in a downtrend. And so because we're in a downtrend, we're going to look and see, do we have a divergence? And if we take a look at the price, we can see that price is making lower low, and the momentum is making a higher low. Okay, now this is the 12-minute time frame, and we can actually even see this from all the way back here. That price is consistently making lower lows, momentum is consistently making higher lows. Okay, great. So that means that we should be looking for a long trade. Okay, if the answer to is there a divergence is yes, then we look at money flow. If money flow is diverging, then there is a trade, okay? If money flow is not diverging, there's a possible trade. We're going to get more into that later. But right here, what do we see with our money flow? Is the money flow diverging? No, it's not diverging, right? It's getting lower as the price is also getting lower, okay? It's getting lower as the price is also getting lower. And so we would say there's a possible trade here, but it's not going to be a massive, massive move. Now, let's talk about the massive, massive moves. You will notice that the massive moves will always happen when there is a money flow and momentum wave divergence on the 12-minute time frame. Let's just go back and take a look at every major top and bottom here, and we'll look and see at what the money flow and the momentum waves were doing, because they were doing something that is consistent every single time. Okay, this is one of the most powerful signals on market cipher B. That 12-minute time frame, money flow, and momentum. All right. So let's go back in time just a little bit here, and we'll start with this top right here. Okay. Now, actually, we can go back even farther. We can really go back even farther here, but for the sake of simplicity, we'll just start up here, okay? Because we can really go back very far. Look at this right here. We can see that we are making higher highs, right? The money flow is making lower highs. And the momentum waves are also making lower highs. Now we're going to break this down. We're really going to break this down in depth, but remember our order of operations, okay? Number one, is price trending, making higher highs, or in an uptrend, or making lower lows in a downtrend? Yes. Yes, it is. And the answer is always going to be yes, right? Price is always going to be doing something usually, unless it's literally ranging from high to low. And so we're like, okay, I see that price just made a higher high here, right? Let's say we've been watching this chunk of price action. It's like, you know what? I see prices making higher highs. Let me check to see if there's a good trade. So I'm going to go ahead and look at the momentum waves and ask myself, is there a divergence? If the answer is yes, then I know I have a trade on my hands. If the answer is no, then I know I have no trade on my hands. So let's zoom in here and analyze this in a very clear and concise way. I just see right here price is making a higher high, right? And I also see here that I have a divergence. So now the answer is yes, there's a divergence. Is money flow also diverging? The answer is yes, right? From this point here to that second high, we can see that money flow is getting lower. It doesn't line up exactly with this first high. That's okay. We're just seeing the direction of money flow over time is drastically getting lower. That is a trade for me, okay? Now, when we enter the trade, look at this. It's a 3% move. That's not a bad trade at all. The way I typically like to enter these trades is I like to enter as that red dot is starting to print, okay? As that red dot is starting to print. So like somewhere around here, let's say this is a pretty safe entry. Once that red dot starts to print and you see the money flow coming down, you put your stop loss above the last swing high. That's less than a 1% move. And then, you know, I usually will set my take profits. If this is a true 12-minute money flow momentum divergence, I will then set my take profits for, I'll TP1 at a 1.5% move, TP2 at a 3% move, and then let some ride. Because these can be runners, guys, let me tell you. So that was a successful trade. Now, notice this, okay? Now, we make a lower high. So because we made a lower high, we don't even consider entering a trade here because we ask, you know, is there a divergence? No. So we don't enter a trade. But the next time we come up to make a high, now we ask ourselves the same question. Is there a divergence? The answer is yes. In fact, there's a massive divergence. As the money flow, as the price is making a higher high, look at the 12-minute time frame over time. Now, the more divergences in a row you see like this, especially if we have a massive pump and then we start to range a little bit, this is super important, guys. If we have a massive pump and then we start to range a little bit, and you see this, the momentum and the money flow getting lower after a huge pump, This is telling you you're going to have a pretty juicy short on your hands. Okay, a pretty juicy short on your hands. Now, when we put in that final higher high, we're saying, okay, we put in a higher high, price is trending. Let's look at the momentum waves. Do we see a divergence on the momentum waves? Yes, yes, big time, right? Even just locally from here to here, massive divergence. Then we say, yes, there is a divergence. Now, is money flow also divergency? Yes, that equals a trade, right? So we can enter our trade right here, and we'll go ahead and, as the red dot is printing, now this was a pretty massive, this red dot right here, we probably wouldn't have gotten in until kind of low, but we put our stop loss above the last swing high. Okay, and then we set our targets down, and this trade was absolutely massive, okay? This trade was absolutely massive. I think I shorted this with like 75x leverage, and I'm sorry about my computer, guys, being slow. I really need to get a new one. There's something wrong with my computer here, but that's okay, because the information is still being communicated clearly. We can see there was a really massive move down here, okay? Then when we come to the bottom, right, to long it back up, we are going to be waiting for just the opposite. So let's come down here and see what we got going on, okay? As we are making our first low, right, you might think to yourself, oh, price is making a lower low, right? So what's the first thing we should ask? Do I see a divergence? No, we don't see a divergence. Price and momentum are doing the same thing. Then we come in for our second low right here, okay? Now we should be asking, okay, is there a divergence? Well, the answer is yes. We come down to make our lower low, and the momentum waves are getting higher over time, right? Then we ask ourselves, how about the money flow? Well, the answer is money flow is getting higher, right? That is a long. And right here, we have a very nice move to the upside, about 5%. That's juicy, about 5%, right? Now, after that, price comes down and makes an even lower low. So we ask ourselves, is there a divergence? The answer, yes. Look, we can see it now, a triple divergence, right? We got our first trade. Now we're actually getting our second trade. We ask ourselves, is the money flow also confirming? And the answer is yes. And let me just make a quick caveat here. Money flow crossing, right, is very powerful. If you see the momentum waves diverging and the money flow is starting to cross, that is very, very powerful, guys, especially on the 12-minute time frame. And then we get our long entry, and we can see a beautiful, beautiful, beautiful long entry right there, all the way up to the top. We come to the top. What do we see? Well, let's go through our criteria. We see prices trending. We're making a higher high. Okay, let's ask ourselves the question, do we see a divergence on the momentum waves? The answer, yes, we do, actually. We see that we are making a lower high as price is making a higher high. And so, but let's take a look at money flow. What about money flow? Money flow is not diverging. When money flow is not diverging, this means you could probably take a scalp there, but don't expect it to be a massive move. And so when I see something like that, I usually enter with very high leverage with a very small percentage of my account. We get into this more in the risk management section of the course, right? The risk management section of the course. But when I see that the price is making a higher high and the momentum is making a lower high, but money flow is also getting thicker, enter with caution, guys. Enter with caution. But then look at this. Then we see this. Price makes a higher high. And look at the money flow now, right? Now, money flow is actually getting lower. And we also see the divergences on the 12-minute time frame, right? This is confirmation to enter the trade. Now you enter the trade up here, okay? And after a while, some consolidation, boom. We totally dumped down, right? And we never, did we come back to put in an even higher high? We did, actually. We did. So you had a trade right here, which would have been a 2% move. Not bad, not bad, right? But then again, right here, you come up to make an even higher high, and this time money flow really is coming down. Now, just so you know, the more drastic the money flow is getting down, the better of a trade you can expect, right? You can expect a bigger move when the money flow is more drastically changing direction. Okay, so here we can see, wow, look at that. Money flow is really coming down. The momentum wave is really coming down. This is another entry, and boom, we come down from there. Okay, so you can see the money flow is acting as a filter and a gauge to tell us how big of a move we can expect. All right, so money flow acts as a filter / gauge. I don't know how to spell gauge, guys. To tell us how big of a move to expect. Okay, so no money flow div equals small scalp risky. Slight money flow div equals maybe like a, expect a smaller move, like a day trade. Expect a smaller move, day trade, a few hours. Just a small little gain, right? Significant money flow div equals expect a larger move. On average, at least 3%, right? On average, at least. Sometimes 10% or more, seriously. Because a lot of times this happens, guys, at the highs and low, like the high and the low, right? So a lot of people also look at some of my entries and they're like, Jay, like, how the heck do you get such good entries? Because the 12-minute red dot doesn't print. The truth is, guys, you have to front run it. And there's two different ways to go about front running it. Number one, when you see the money flow coming down, that should give you the confidence to enter the trade because you know that that red dot is going to confirm kind of soon. So let's say, for example, we have our divergence up here. It's unconfirmed, but we see the money flow coming down and we see the price putting in that higher high. You should have the confidence to say, you know what, this looks bearish. I think we're going to come down. But to get higher confidence, I like to go down to the 6-minute time frame. And on the 6-minute time frame, now we can really see, even more zoomed in, that this momentum wave is about to clip and give us a red dot. Okay, then we can come down to the 3-minute time frame. And on the 3-minute time frame, what do we see? We see the red dot actually is already even confirmed. So we see the divergence on the 3-minute time frame already confirmed. Okay? And what we're doing, you have to understand that when we zoom in on the time frames, it's literally showing us the same exact thing, just zoomed in more with higher resolution. So if we see on the 3-minute time frame an already confirmed divergence momentum money flow, as we're seeing the 12-minute also giving us the same signal, we can really have the confidence to front run that 12-minute red dot because the money flow is coming down and we see the divergence starting to form on the 12-minute, but the 6-minute and the 3-minute are giving us that confirmation, right? So I kind of want to talk about how to tell if a 1 or a 4-hour divergence is legitimate. Because the other day I was eyeing up a trade to potentially take if we had a 4-hour divergence, and I didn't really end up taking that trade right away. And here's why. It was this right here, right? It was this one right here. This one right here, if my memory serves me properly. No, it was this one right here, guys. It was this one right here. So I was kind of eyeing up this 4-hour time frame, saying, you know what, it's very, very possible that we will be able to short this level around this zone, right? I was looking to short around this zone, and I actually did take a short from around that zone, and we did come down from here. But you got to be careful on the higher time frames because a lot of times you'll see, okay, we're clearly putting in a higher high, but at the same time, we're putting in a lower high. We can see that, but look at what happened. After we put in this first high, we come up for another pump, right? I want to talk about how to avoid getting sliced up, trying to short, being right? Let's just say right off the bat, if you had taken a short here, you would have been right in your assessment that the price was coming down. However, you might have gotten stopped out and taken a loss, even though your analysis was right. So we need to determine how to tell if these higher term time frame divergences are legit. The way we're going to do that is by looking at that 12-minute time frame. All right, we come back down to our 12-minute time frame, and what do we see? As we're putting in this first high here, look at the 12-minute. Is this showing us any kind of bearish divergence on the momentum and money flow? No, not at all. The 12-minute is going to be our filter for determining if those higher term time frame divergences are legit. If you see the 4-hour divergence, you need to zoom in to see if it's legit. Look at the 1 hour as well. On the 1 hour, what do we see? We're putting in our higher high, but look at the momentum waves on the 1 hour, right? On the 1 hour, momentum waves are getting higher. This would be our first sign here that we shouldn't be taking the short yet, right? We shouldn't be taking it yet. We need to wait for more confirmation. Now, money flow is getting lower on the 1 hour, which if you're swing trading, low leverage, by all means, I would have taken a short here with no stop loss. Well, I should say with low leverage and a loose stop loss using good risk management. Okay. But the kicker for me is always going to be that 12-minute time frame. I didn't enter the short until I got my confirmation on the 12-minute time frame. Because on the 12-minute time frame, look at this. We get our high, we get our money flow coming down, and we get our momentum waves coming down. This is going to be the filter that tells you whether or not those higher term time frames are about to play out or not. Because we have to understand the 4-hour time frame, there's a lot of room for volatility there before it actually plays out, right? This is a very powerful signal, but there's still room for volatility there before it plays out, okay? So we can see that, you know, if you see those higher term time frame signals, keep them, understand that the trade is coming soon. But for me, the signal is the 12-minute, okay? It's the 12-minute. We're going to go over a few more things here, okay? We're going to go over a few more things here. This is how you're going to have confidence. This is how you are going to have confidence entering trades, okay? You're going to see those higher time frames, and then you're going to, honestly, this 12-minute money flow and momentum strategy is something that has made me so much paper money, because I'm a paper trader only. Remember, this is not financial advice. This has grown my paper account strategy very, very much, because this will tell you whether or not you can trust your plans and your analysis, okay? And then I always use the 12-minute and honestly the 6-minute also to tell if those higher term time frames are legit. Now, let's talk about the best times to enter trades, okay? I've gone over this in previous sessions, but it's very important that we remember whenever we see any kind of price action, we need to always look for sideways markets. Sideways markets. Why sideways markets? Because what we want to do when we're trading is we want to buy low and sell high. We want to buy low, sell high. Okay? And we can see very clearly right here that we have a very, very clearly defined high and a very, very clearly defined low right about here. And we're just going to be looking with our eyes, okay? What I want you to do is I want you to pull up any asset, and I want you to just outline sideways ranges, okay? Just outline sideways ranges. I see one here. I see one right here. I see one right here. I see one right here, okay? I see a very small one right here, and I see a pretty significant one right down here. And now, you know, potentially we have one forming kind of right here, right? Now notice, we have all these sideways ranges within a larger sideways range, within a larger sideways range that we can really see from the whole entire beginning of the year 2021, right? We have a very clearly defined high right about here and a very clearly defined low all the way down here at about 30K, all right? If we come all the way back in time, let's go to an even higher time frame like the 8-hour. We can really see we have this massive range from down here to up here. And then right now we're just trading in this smaller range inside the massive range. And we had this small range inside that range, and we had this small range inside the big range. We had this tiny range inside that range, right? We can really just subdivide the market into sideways ranges. Now, why am I going through all of this? Because When we can identify a sideways range, we then have a very clear reference point to define high and low. And if we want to be successful traders, we need to buy low and sell high. We need to enter longs when price is low, and we need to enter shorts when price is high. Okay, now this might seem oversimplified, but it's really not that complicated. The problem most people have is that they buy high and sell low. Now, if we can identify these areas, okay, and then we go ahead and we turn on our market cipher B, what we can do, now remember in the beginning I talked about overbought and oversold, right? What we can then do is we can determine and tell ourselves, okay, if our price is overbought or oversold, if our indicators are telling us overbought or oversold and we're at the low or the high of a sideways range, then we really, really know to take the signal very seriously. Notice what is happening here, okay? When we come to the high of the range, right, we're coming up to the high, our indicator is inevitably telling us that we are overbought, okay? Every time we come up toward that high where we could have taken a short, our indicators are overbought, right? When we see those two things in conjunction, the price coming to the high of the sideways range and the indicators being overbought, that is telling us a short is soon to come. And the opposite, when we start coming to the low and we see our indicators are in the oversold territory, meaning below the -60 line, that is telling us that a long is coming soon. So we want to be looking for the majority of these big trades using the 12-minute money flow and momentum strategy based on these sideways ranges. And I know I've gone over this earlier in the course, but just to kind of give you a quick review, right? What we're going to be doing here is we are going to be looking at volume. And what volume will do, come over here to the prediction and measurement tools, come down to fixed range volume profile. The volume is going to tell you where overbought and oversold is without even looking at your indicators. Okay, so for example, I'm just going to drag the fixed range through the price action. Okay, it's going to pull up a volume range for us. And now what this is going to do is this is going to give us very clear highs and lows based on volume, where we know that the fair value for the asset is always going to be where these candles are shaded color. Now, how do I set this up, by the way? The way I set this up is if you double click it and you go to settings, okay, inputs, I make my row size 200, I make my value area volume 70, all right? And then these are the colors that I use. I make the outside gray, I make the inside blue and purple, the POC white, okay? This is going to tell you that anything below the shaded candles is considered oversold. Anything above the shaded candles is considered overbought. When price comes into the overbought territory, if we see our oscillator also in the overbought territory, we should be looking for a short. If price comes below into the oversold territory and our oscillator is also in the oversold territory, we should be looking for a long. Meaning, as long as Bitcoin is down here, we should be looking for a swing long because we know we're at the low of a macro range. Same down here. We should be looking for longs here because we know Bitcoin is oversold according to volume, also oversold according to market cipher B down here, right? That is how we are going to do it. Now, again, overbought, we want to see the oscillator overbought. Now, the only time I would look for a trade not at one of these areas is if we are at this center point, the point of control, the highest volume node. We will be looking for longs at the point of control. If we're trading above it, we look for a bounce. If we're trading below it, we look for a rejection. And also, we want to see the indicators at overbought or oversold whenever we're looking to take a trade, okay? So we can really pull multiple ranges. Whenever we identify some kind of a sideways range, we can pull this thing, okay? I was trading this range with a volume profile, and even this thing here, and then this massive range that we had down right here, besides that one deviation that we had right here, right where we came up and then back down, really we could have just shorted every time we came up here, longed every time we came down here, shorted every time we came up here, longed every time we came down here, right? And so what we're going to do is if we combine our 12-minute strategy with these overbought, oversold indications, then, I mean, we can really make stuff happen. All right, then we can really make stuff happen. So let's just take a look at the most recent short that we could have taken here, just by looking at this this volume profile. Okay, we can see that we have our value area high right here, our value area low down here. Whenever we come above this line, we should be looking for shorts. So we're above the line, we should be looking for shorts, What do we see up here? We would have gotten a few good shorts using our strategy, right? We can see that we're putting in a higher high right here. Money flow's coming up, so actually this would have not been a signal right here. And then right here, we are putting in a divergence, money flow's coming down. So this would have been our first short, a pretty juicy one. This would have been our second short up here. And again, because we can see the money flow is actually from over here to over here getting lower, that this actually would have been a second signal. And from that point, well, we can come down. And actually, there's some live price action going on right now. But it's not really ranging. Let's quickly check out what's happening here. I'm glad this is happening actually during a course session. So right here we can see on the 6-minute time frame at least. Actually, let's go to the 12-minute time frame. What's happening on the 12-minute time frame? We can see that although we do have a bullish divergence forming, we can see that the money flow is getting lower. This is telling us, if anything, look for a scalp. Let's go to the 6-minute. What do we see? We can also see that that divergence is indeed forming here. How's the money flow looking? Money flow is getting slightly higher. So this is an opportunity where you could take a scalp trade right here, right? This is an opportunity where you could take a scalp trade. Now, this is not your typical golden pocket because we have a daily level down here. Let's see what happens at this daily. Man, the 1 minute also giving us divergences here, right? And so because the money flow is not coming down all the way, but we're still getting those divergences, this actually would be an area to take a scalp, right? And look at this. We're clearly getting a reaction here. We're clearly getting a reaction right here. And this is literally what we're going to look for in real time, okay? Now, obviously, the 12-minute didn't really give us that kind of confirmation. But this is a lower term time frame type of trade, right? It's a lower term time frame type of trade where we're just looking for a small scalp right here, where we got to bounce off of our level. We see our divergences. We see the money flow is coming up on the lower time frames. So we're not really looking to catch the top or the bottom like we would for a for the 12-minute strategy, but we would be looking to take a scalp trade right here. Okay, we would absolutely be looking to take a scalp trade right here. So that is it, guys, for this session. Really, this is the strategy in a nutshell. We're looking for divergences in momentum and money flow. To gain confidence, we're going to zoom in, right? And then after we zoom in, we are also going to make sure that we're using volume to determine overbought and oversold. And then we are going to determine whether or not we want to enter the trade based on all of those parameters. Okay, based on all those parameters. So I really hope you guys find this useful. This information alone, if you don't know anything else about trading, just this session alone can be very, very powerful to you because it gives you very specific things to look for. All right, y'all. I'll see you in the next session. Peace.